Imagine a skyline at sunset. Cranes reaching upward, glass towers catching the last golden light. Now imagine those towers, shopping centers, beachfront resorts, even suburban housing developments, all living on the blockchain. Not as blueprints or photos, but as tokenized assets. This is not tomorrow's dream. It's already possible today on the Pecu Novus blockchain. Real estate has always been about location, location, location. But now, it's also about tokenization, tokenization, tokenization. On Pecu Novus, developers and property owners can take an asset such as a finished building, a parcel of land, even an entire mixed-use development, and convert its value into secure digital tokens and monetize it. These tokens can represent full ownership, fractional ownership, or even specific rights, like rental income streams or future usage. Why does this matter? Let's start with the value add to developers and owners. For a developer, tokenization on Pecu Novus means faster capital raising without being bound to a handful of investors. The ability to fractionalize high-value properties, making them accessible to a much wider investor base. Liquidity for traditionally illiquid assets. Selling fractions of a property without selling the whole thing. For owners, it's a way to unlock equity without taking on debt. Attract global interest, and not just from institutional players, but from investors big and small worldwide. Turn a static asset into a dynamic, tradable instrument. Now picture the entrepreneur's opportunity. An ambitious startup could build an entire real estate tokenization business on Pecu Novus. They could work with property owners to digitize their holdings, build marketplaces that connect tokenized real estate to a global audience, offer services for compliance, valuation, and marketing, all powered by blockchain transparency. The barrier to entry for building such a business, lower than ever, thanks to the tools and infrastructure Pecu Novus provides. And here's where it gets exciting. Pecu Novus ecosystem over time will reach across both centralized and decentralized exchanges. That means a tokenized luxury condo in Dubai or a fractional share of a ski resort in Switzerland could trade globally, giving projects exposure to investors from New York to Nairobi to New Delhi. Fractionalization changes the game for large projects. Instead of hunting for a handful of wealthy backers, developers can attract thousands of smaller investors. A $100 million project can be broken down into $500 or $1,000 slices, letting everyday investors participate in opportunities that were once locked away behind velvet ropes. Pre-selling unfinished projects. That's another breakthrough. Developers can tokenize a project still in the construction phase, offering investors a share of future ownership or revenue streams. Funds raised from those tokens can complete the build and even help launch new projects without traditional bank financing. It's the ultimate cycle. Tokenize, build, deliver, tokenize again. The possibilities, endless. From commercial towers to single-family homes. From farmland to beachfront resorts. Pecu Novus can be used for it all, and make it globally tradable. And just like that, the walls around real estate investing start to fall. Because now, owning a piece of the world's most valuable asset class isn't limited by geography, bank accounts, or old-school gatekeepers. It's open, it's transparent, it's Pecu Novus, and it's rewriting the blueprint for real estate finance, one digital brick at a time.